What's up, guys? Welcome back to this channel. And I've promised you guys that I'll be dropping a module which I use in my everyday trades, how simple it is, and everything that you watch out for before you go into the market for a buy or a sell position. So, without wasting much of our time, let me head on to how the module is and the psychology behind it. So, this is a line graph. I didn't draw this myself. With the help of TradingView, I was able to get this. You can just change from candlesticks to line graph. So I want to show you from the line graph so that you'll be able to understand it more clearer and more better before you jump into the candlesticks, how they form. So this is a time-based model. So I would advise you to change your time frame on your TradingView down to the New York time, because I trade only using the New York time, just ICT basics. So without wasting much of our time, by 7 o'clock New York time, I want to see the market create a high and a low. So this is the high here. It creates the first high, so we note that as our buy side liquidity, and it trades from the buy side liquidity down here and creates a sell side liquidity right here. So when we are bullish, I want to see the price takes out buy side first before taking out sell side. But when we are bearish, I want to see the sell side being taken first. So as price move, it takes out the buy side first. So at price open from this level here, it push and creates buy side. Then it dips down, taking out this low and created the sell side. When moving, you can see how price fails to get back to the buy side, but takes out the buy side first without failing to take out the sell side. So once it takes out the buy side, it shows that we are bullish. Then it dips down to grab liquidity here from the sell side. Then it push to the upside. So now when it grabs the liquidity here, I will be waiting to see a fair value gap being presented, and to support that we are strongly bullish, because fair value gaps are showing the momentum in the market, as the momentum is high. So if you are looking at this model very well, one secret I will tell you that is, if the model would offer you, it doesn't hesitate. From the fair value gap it will present, price is expected not to come back to your entry points. It keeps moving higher and higher. So now let me go back to the candlesticks so that you'll be able to see how it's been formed, the easiest way to figure this pattern very fast. So now this is our candlestick formations now. So from the open right here, you can see how price created a high, lower high, it creates another higher high, then it drops down, taking all these lows here and creates this lower low. This is the sell side and this is the buy side. When pulling up, it fails to take out the buy side and it fails to take out the sell side. So now we taking out the buy side first shows how strongly we are to go to the upside, that's to the buy side liquidity. So now it grabs the liquidity here, then it drops down to take out the sell side too. So now when I see that, now I feel we are highly bullish. So now I'll be waiting for a fair value gap to form, and I want price to create the fair value gap and test it before moving. So you can see when price has taken the sell side, it creates this first fair value gap right here, and you can see price failed to fill into it. That's making it a breakaway gap. So any fair value gap that is not tapped in is called a breakaway gap. Then you can see how price created the second fair value gap, then tap into it. So our entry will be right at the tick right here, that's at the top of that candle, risking what? Risking 5 pips. Why I risk 5 pips is because if price will offer you in this model, it will just keep spiking without even retracing back into your entry point. Talk more of what? Dropping down to that 5 pips, because I don't want to give a 2 pips stop loss or 5 pips stop and 3 pips stop loss. So I just, because of spread and everything, I just keep it 5 pips at most. So now when price tap into it, so now the levels which you can take, if you notice me, I always take my trades using my fibs to get the level which I take out my partials from and where I will move my stop loss to. So now you draw your fib from this low here, the recent low that was created, to the high that breaks the buy side right there. So now you can see how price has tapped into it and it moved to the upside. So now if you are right, you don't expect price to get back to your entry points anymore. So you can see how price keep moving. So how you can manage your trade now using the Fibonacci, which I just draw now, is when price gets to, let me shrink the chart a bit so that you'll be able to see those levels perfectly well. So how you can take out partials, how you can manage your trade very well, because that's where most people has issues on trade, whereby you get a good trade, at the end of the day it will take you out without making profit. So the essence here is just for you to learn how to take partials. So now when price move to this level here and it breaks this 0 point here, it moves to 0.5 level. So I expect my stop loss now to move to to break even. So when I move my stop loss to break even, that's at most this low here, then I take my first partial at -1, I take my second partial at -1.5, and I terminate my trade completely at -2. That's how you can manage your trade. You move your stop loss once price has reached to -0.5, then you terminate your entry completely. But I'm sure price will move even more than -0.2, but that's where you manage your greed and try to follow your model, which you can be able to make money out of it. So that's how you can manage your trade. So now let me talk about the psychology behind it. So let me show you how this trade has moved. So you can see from the entry here, price failed to get back to where you entered, but it offers nicely to the -2, which is giving you a 38 pips there from your entry, and your risk is just you risk only 5 pips, giving you a risk to reward ratio of about 7-1. So that's how it offers. But if it's not going to offer, it will just take you out. And once it take you out, the advice there is you take 1 trade a day, and you don't have to fight with the market If not, it will take your account all. So you take one trade one day, because I know that less is more. That's why I have a slogan which says slow is smooth and smooth is fast. So if you can just have a thought of that slogan which I just said now. So if you look at our chart very well, let me give you the psychology behind this now, just to be quick and precise. We open here, we are all newbies. Let's just assume that. So the market creates high, it breaks it, keeping what, this high here. So it shows that, okay, we are newbies, we just see it rallying up, so we just take a buy position, putting our stop losses right at these lows. So it will come back now and take out this stop loss. Then we'll see that, okay, it's going down. Okay, let's sell. We'll still enter for sell position, and it will still come back now and take out our stops right here, because what the books told us to put our stop losses at what, the swings. So the market will target all those stop losses first before what, doing its thing. So now at this level now, it breaks what, the buy side. So some of we the newbies now will put what, will put a buy limit right here, so that if the market breaks, it will take us for a buy program. Meanwhile, our stop losses will be what, at this swing and at this swing. So the market will come down now to what, to take out those stop loss. Then some again will put what, to sell at this point now, a limit order to sell at this point. So now it will pick them in, and their stop losses will be what, at this high right here. So you can see now what, they have been what, trapped in now for a sell program, which automatically the market is going what, is going higher. So now giving us the fair value gap, that's where we enter. And when going higher, people that are trapped in for sell position, their stop losses are here, so we take care of their stop losses here. You can see how nicely when it is taking that high, you can see how fast it takes it, because what, liquidity is resting right above here. That's all their buy stops are resting here. So this is just a quick one for the psychology behind this model, and it will keep going higher and higher and higher and higher. So automatically you can see now all the traders that have seen all this rally here are no more in the what, in the buy program. So that's just the quick concept of this model which I just spell out right now. So you just keep following for more content you like, reward, and will be right at this point when you are selling, because that's everything that the books have told us, that our stop loss should be at the swings, right? So now when it dips down now, you see automatically you have gotten your what, buy side and sell side. When it start moving now, consolidating in between this dealing range now, it shows that we don't know which direction it's going to. So when it breaks the buy side first, so you have a confirmation now that you are what, you are bullish. Then you wait for liquidity to be grabbed in the market, that's from the sell side. So now you can see how it dips down and gain more liquidity here. So from this pull up here, okay, you see a breakaway gap, giving you an insight of how momentum is coming into the market, and you get your fair value gap. And you can see this candle now, it dips inside and just wait to the consequent encouragement, that's the midpoint of the fair value gap, before what, moving. So your entry should be what, at the top, because or one tick above. So if you want to wait for it to get to the midpoint, at some point you miss good trades. So you have to take your trade at this top here. That's, you take it here, and your stop loss should just be 5 pips, because if it will offer, it will not go down more than 5 pips. I don't want you to trust this model. I just want you to go back, you back test it, as far as you can go. Just keep back testing it. You'll see the win rate is about 70 to 80% win rate. That's your hit rate. You can see it's giving you a nice good risk to reward, and from this risk to reward here, you can know that even if you lose two trades in a row, you'll be able to cover up with just a single trade, even giving you times two of or times four of what you have lost in your previous trade. So this is how simple the model is. So now you can come to your chart without a bias. You just know that okay, when you get a high and a low, you wait for one to be taken out, and once that the buy side is taken out, that's when we are bullish. We expect the buy side should be taken out first before the sell side, to gain more liquidity before sending price higher. So this is just the quick one on this model. I'll be dropping some of my my live reviews on this particular model which I just showed you right here, so you can see how price move. So I'll be dropping the reviews. I'll create a playlist for those executions and how you can see the model is painting out. So I believe that you find this video insightful, and I believe you'll be able to go back and back test it. And if you are new to this channel, you hit the subscribe button, you like, you comment, and any of your friend that is interested in this kind of video, you can share to them for us to grow this channel to a reasonable figures. So now I hope you have gained more in this lesson which I did. So I want to keep coming back for all the reviews which I'll be dropping, and anything that you don't understand right here, you can go back to my previous videos. I've done a video of how you can identify your buy side and sell side liquidity, how you can identify your fair value gaps, and how you can understand your trend. That's when it's making higher highs, lower low, higher high, lower high, higher high, lower high. That's an uptrend. When it's making a lower high, lower low, stuff like that, you'll be able to you'll be able to notice which trend you are in. So now I guess you should just go back to my previous videos and watch and see how you can identify these things now without hesitation. And my FIP levels, I have a video which I taught how to edit and give you that value so that you get those levels which I have on my FIP level. Then your time should be set to the New York time. So that's just it. I hope everything is clear and straight and precise. So you have a good day. The market will be opening anytime soon because today is Sunday. So I'm waiting for the market to open so that I'll get the new week opening gap to work with for this week that we are entering. So you stay safe, and I still remain BicwizZ. Peace out.